In the May-June issue of International Construction, the Yellow Table revealed the world's top 50 construction OEMs by sales. We're going to be taking a look at the table in a bit more depth and highlighting some key themes. Some of the main points to highlight are: sales for the Yellow Table totaled $230.6 billion, just 0.4% less than the previous table, which was a record high. The strong sales were down to good demand across the world, which compensated for the decline in China. 6 of the OEMs in the top 10 changed positions, with only 4 remaining in the same place. Revenues generated in the Yellow Table from firms in Asia have fallen from over half of the total amount last year, 50.2%, to 44.8%. It can be argued that this is a healthier figure for the industry, as it means that the sector is not so heavily dependent on one region. The main reason for this decline is China, which saw the total revenue generated by its OEMs fall from 25% to 18.2%. The US sees an increase to 26.8%, helped by the strong showing of Caterpillar and John Deere. Europe saw an increase from last year's percentage of 26.3% to 27.5%. Europe has 4 companies in the top 10, Volvo CE, Liebherr, Sandvik, and JCB. Sales for CAT's Construction and Resources division increased from $32 billion in the last table to $37 billion, with the gap between it and second-placed Komatsu and the rest of the table increasing further. Komatsu saw its sales decline slightly when adjusted for currency calculations, and XCMG remain in third position, meaning that the top 3 are unchanged from last year. Chinese-based OEMs have been increasingly focused on expanding their sales in overseas markets, and this strategy enabled XCMG to hold onto third position, just from John Deere, but SANY slipped 1 place to 5th in the table, overtaken by John Deere, which since the acquisition of Wirtgen has been steadily climbing the table. Volvo CE are the highest European-placed company in the table, with the OEM remaining in 6th position. Liebherr climbed to 7th place and are followed by companies that climb 1 place, Hitachi Construction Machinery, Sandvik and JCB. The UK-based company returns to the top 10 boosted by the uptick in India. These companies all rise 1 place, in part due to China-based Zoomlion dropping from 7th position to number 12. This chart illustrates the strength of the world's top 10 OEMs. Combined, they equate to 62% of the table's total, with the top 2 of Caterpillar and Komatsu generating over a quarter of the total sales. In the last table, the top 10 generated 65% of the total sales, so as a percentage, sales are more spread out over the table. This chart shows the total sales of the Yellow Table over a number of years, enabling longer-term conclusions to be drawn. The 2021 table was the first since the world, generally, emerged from lockdowns due to the COVID-19 pandemic, and therefore it was expected that sales would rise. The sheer scale of the rise, to the highest figure ever recorded on the Yellow Table, was a bit more surprising. It is therefore impressive that this year's table sees just a 0.4% decline in sales from this record amount. Looking to the future, it is likely that in next year's Yellow Table sales will decline again, and by more than 0.4%. This doesn't mean that construction will have a bad year, just that the previous years have been record highs. OEMs are still reporting strong order books, and governments around the world are continuing to invest in infrastructure projects, some on a truly huge scale. Supply chain issues and worries over increasing inflation are genuine concerns, as is the increasingly fractured nature of geopolitical relations, but the demand for the products made by OEMs is not going anywhere. Even a drop of several percentage points in next year's table would still mean, when looked at from the wider historical perspective, that the sector had performed very well.